Hello everyone, and thank you for having us here. Julie, as Adam said, is our e-safety commissioner. She leads the world's first government regulatory agency designed and committed to keeping our citizens safe. And Julie has launched the Global Safety by Design initiative, which will be the subject of our discussion today. Catherine has authored a report that will also feature in our discussion today, which is called Designed to Disrupt, Reimagining Banking Products to Improve Financial Safety. And Leif leads a team at CBA that is also responsible for customer and community advocacy. The team raises awareness across the bank about building products and services that focus on customer safety. Leif is also an expert in the use of explainable and fair AI and sees great potential for AI to support safety by design principles, and he will give us his industry perspective on those issues. I just want to briefly introduce our topic before we launch into the discussion. I think this is a topic of great importance given the economic and financial pressures many in our community are facing. And the banking sector itself is grappling with how to support customers who are victim survivors of family and domestic violence, and in particular financial abuse. Catherine's report provides one solution, which we'll talk about today. It argues that banks should adopt safety by design principles into the design of its products and services in order to prevent financial harm. Now let's start the discussion. Julie, I might start with you. In your role as e-safety commissioner, you have collaborated with the technology sector to implement safety by design practices to minimise online threats. Can you please explain to us what the safety by design principles are and how they've been used by the technology sector to minimise harm?
Sure. Well, I actually spent 22 years in the technology industry at Microsoft, Twitter, and Adobe, so I saw firsthand how safety was kind of subordinate to security and privacy. So I used to sit in product reviews where they'd be seeking out security vulnerabilities and privacy, but they weren't thinking about the personal harms that products and services like Skype, which was being used 10 years ago as a vector for live stream child sexual abuse, or Xbox Live, which was quite a toxic place at the moment. And so I tried to introduce into Microsoft in 2009 the whole concept of safety by design. But they're like, oh no, Julie, we're not becoming a social media company, we're becoming an enterprise company, personal harms aren't important. And when you think about how technology companies refer to their customers, they refer to them as users rather than consumers or customers, and I think that says a lot. And of course, the technology industry hasn't been regulated in any kind of way. So when I took on this role as e-safety commissioner, I was given a number of regulatory tools, again, the first in the world. We have focused on prevention through education and fundamental research, protection through the regulatory schemes, but what was missing was minimizing that threat surface for the future, putting more of the responsibility back on the platforms themselves to assess risk and anticipate and then build in those mitigations, so baking in the safety protections rather than retrofitting after the damage had been done. And the best analogy I came up with was thinking about over 50 years ago, Ralph Nader, who was a young lawyer writing Unsafe at Any Speed about the Chevy Corvair. And he directly tied fatalities to traffic accidents to the lack of embedded safety protections or seat belts. And at the time, the car manufacturing industry pushed back radically. But now we get into our cars, we take for granted that we have anti-lock brakes and airbags, and car companies actually compete on their safety record, and we have new innovations like we have crumple bars and rear lane changing sensors and all this sort of thing. So I don't know why we can't encourage the technology industry to have their seatbelt moment. We're not going to regulate our way out of online harms because we're fundamentally talking about human behaviors, and humans will find creative ways to misuse technology. I think we all understand that. But I also knew that we had to do this with the technology industry rather than to them. And 5 years ago when we started this process, I think there were a few sniggers here and there, like, that's soft. Well, you have to really, if you're going to tackle these issues, you have to tackle it at multiple levels. And now when we think about things like the metaverse and immersive technologies and generative AI, I don't know how many of you saw Sam Altman testifying before Congress. He was very well prepared, and on one hand he said, I'm really fearful about the harm that this could bring to humanity. But then he said, well, really what we need are safety standards built in at the beginning before they're exfiltrated to the wild. And I just thought, you've already unleashed these into humanity, into the wild. It's too late. So how do we actually put that burden back onto the AI industry and that tech industry to be thinking about those risks before they move fast and break things, which, what we're talking about are humanity, humans and people.
Thanks, Julie. The safety by design principles, I think you've just alluded to them, are intended to be universal and have global application across industries, really industry agnostic. With this in mind, do you think the safety by design principles can be used by the banking sector and the financial sector more broadly to help improve women's financial safety and prevent harm to victim survivors of family and domestic violence?
100%. So just for people who aren't familiar with the principles, and you can see them on our website, we started out with 4, but through consultation with about 180 different organizations, we arrived at service provider responsibility. What does that look like? The burden for safety should never be on the user or the customer. User empowerment and autonomy. How are you empowering users? Not relying on them to look after their own safety, but making things like reporting or blocking or conversation controls intuitive and easy to find. And then transparency and accountability. You can't have accountability if you don't have a greater degree of transparency. And the government has given us powers under the basic online safety expectations to compel that transparency from technology companies because that hasn't been readily available. So these are very transferable. And in fact, I'd say the Australian banking and financial sector has embraced safety by design principles more readily than the local technology industry. And we have Catherine to thank for that. In fact, it all started with a conversation that we had with Catherine when she was at CBA. We had been delivering presentations to family and domestic violence workers because we know that in 99.3% of domestic and family violence cases, technology facilitated abuse of an extension of that coercion and control is a feature. And we were hearing from the community that women receiving child support payments through online banking transactions were receiving microaggressions. And so we had that conversation. And you can tell the rest of the story, but thanks to the actions that Catherine started, it's really created a very positive ripple effect across the banking sector here.
Yeah, thanks. So maybe I could tell the rest of that story.
Please do,
Catherine. At the time, we had a specialist customer vulnerability team that I know is in Leif's team now. And one of the customer support staff said, hey, look at this, and saw a number of 1-cent transactions in an account of a woman that she was supporting experiencing domestic and family violence, which had threats and intimidation and harassment and abuse. And so we had a data science team who analysed 11 million transactions over 3 months and found that there was a pattern. It was low value, high volume transactions with these threats in it. One of them I read was 900 messages, one after the other, in one day, including, I want to kill you, I want to kill them all. So we found a thing. And amazingly, the rest of the banking industry said, well, maybe this is happening in our banks, and they investigated and they found that it was. And through the ABA, we all agreed that we'd move against it. So we spoke to the eSafety Commission and said, well, what do we do? What do we do about this? And Julie was very kind to share safety by design, and we implemented that approach.
Thank you, Catherine. I mean, that was an example you just talked about, the descriptions in payment transactions. You use the word in your report with the weaponisation of banking products, and I think that's a clear example of a situation where that is happening. Where else does that happen, and what else do you mean by the use of that phrase?
Yeah, I might just talk a little bit about financial abuse because that was the context in which I did the paper for the Centre for Women's Economic Safety. And basically financial abuse is where someone controls access to another person's money and really tries to use the lack of money or the lack of access to that money to control their victim. And you do see it a lot in domestic and family violence. You would have heard the expression of coercive control. Financial abuse is a critical part of coercive control. And 1 in 6 women have experienced economic abuse, which can also mean lack of access to work or other means of earning some money. And I think the latest survey from the Australian Bureau of Statistics on personal safety shows that 1.6 million women have had money or job opportunities controlled or restricted. That survey was from 21-22. So when I set up customer vulnerability teams in CBA and at Westpac, what we saw was that financial abuse ranked 3rd behind the reasons that customers contacted us around being in vulnerable circumstances. Financial hardship was the first one and scams was the second one, and we've talked a lot about that here. Why is that? Because research has shown in Australia and the UK that women are more likely to talk to their bank than they are to a specialist service about experiencing economic abuse, because they want to set up an account to be safe and have their own money, because they want to be able to escape and they need to disentangle and start again. So I wanted to look at, well, with those accounts, in a bank account, how are they weaponised by abusers? So some products are specifically used to and manipulated and misused by perpetrators of domestic and financial abuse to control others. And some examples of that are abusers might open credit cards in a victim survivor's name and they take out the credit without their knowledge or consent. You can do it really easily. You can open it online, and so you might do it multiple times, and that would impact a victim survivor's credit score. Or they incur what people call sexually transmitted debt. Another example would be refusing to authorise joint account transactions, so they're restricting access to money, or they might clean out the account altogether. Mortgages is much more complex, but we know that joint mortgages are fantastic to help someone afford to buy a house, but in a financially abusive situation, the abuser might not pay the mortgage repayments, or they might refuse to go into a hardship arrangement. They can ignore property settlement orders, and the bank is quite often in a bind of what they do about that. And then obviously payment descriptions is another one.
Thank you, Catherine. I mean, there's a vast array of ways that I think perpetrators are using these banking products to their advantage. Your report urges the finance sector to introduce a new safety by design framework to improve financial safety, and I think the banking sector is already down that path by disrupting the abuse in payment transactions and descriptions. What else can the banking sector do? And if you can give us some examples, maybe using some of the banking products.
Yeah. So it's really building on the eSafety Commission's work and Julie's work and saying how might you apply that in the finance sector, and I think you can apply it across a number of sectors. So in the paper I talk about the principles which extend the principles of safety by design into banking and make it really much harder to misuse financial products as that tactic of coercive control, and also really to send a signal that abusive behaviour is unacceptable. And the reason that I have said that is because if we're going to achieve the objective of the National Plan to End Gendered Violence in a Generation, which is what all governments in Australia have signed up to, we have to stop sending the ambulance to the bottom of the cliff. Of course, we should be providing better support to victim survivors, but actually we need to turn the spotlight onto perpetrators and those who make a choice to use violence, to abuse people through their finances or control them. And I do think there's an opportunity with the introduction of coercive control laws to then look at that quite differently. I think one of the things that I've looked at in there is how might you change some of those products. So if I look at the example of credit cards, for example, we're looking at friction in the system to protect against protect against fraud and scams, and that could be two-factor authentication. Could you apply that when somebody's applying for a credit card online? And it won't catch every case of financial abuse or where someone is being coerced, but it may well put some delays in the system. Another example would be with joint accounts, making them much easier to split up when you originate them. So making sure, and this is in the financial abuse and domestic violence guidelines for the ABA, which is saying you should have separate logins and you should have the ability that if you do need to separate those accounts, you can do it without informing the other person, and that you can make that much easier. And then the other aspect I've raised is how might you change terms and conditions as a starting point for financial safety by design. So banks have already said some banks, 40% of ABA banks have said if you send threatening messages through payment descriptions, that's a breach of our terms and conditions and it's unacceptable behaviour. None of the banks so far say financial abuse is really bad, don't use our products and don't weaponise our products. And we have done a review of all those terms and conditions and are calling on all the banks to introduce those terms and conditions. That this is an expectation of our customers who bank with us. So my view is that if every bank in Australia and if every company in Australia said a condition of being our customer is to show respect for women, that would be a game changer. And so that's one of the other aspects that we would like to see.
And the focus, I think, on the perpetrator itself is critical, I think, in situations like this, Catherine.
Yeah.
Yeah. Moving on to you, Leif. Banks hold a lot of data about customers, complaints, spending patterns, trends, etc. How can this data, combined with the use of technology, be it through machine learning or AI, be used by banks to supplement the safety by design principles?
So I'll get to that point, but I'll answer another question that I'll generate, and that's around what could we do around the terms and conditions, and we are now taking action to review all our high-risk product terms and conditions to explicitly call out that we will not tolerate our products being used to perpetrate financial abuse, and we'll take appropriate action against perpetrators where they weaponise those products to do so. So we'll make that very explicit in all the high-risk products. You imagine the credit products, personal loans, credit cards, mortgages, transaction accounts, and savings accounts, etc. But there's others that, from a safety by design perspective, when you stand back, you go, what other edge cases might be in the portfolio? And safety deposit box pop up as a high-risk product. And why? Because perpetrators will collect identity documents or other documents that undermine the financial independence of victim survivors and lock them away in safety deposit box. So you've got to look at the whole portfolio through that safety by design lens to really see it. And that's where data helps. Data helps a lot. We're looking at the vicinity of something like these outliers that hide in the deep, dark shadows of the digital infrastructure, something like 0.0005% or less, where we're trying to identify these indicators of financial abuse. So it's really, really important that you because they're so unusual, the patterns are so unusual, you can never find them with humans. So if you have a human augmented approach using safety by design, it's very powerful. All of these things to us are now relatively obvious, but if you'd asked us 5 years ago, we wouldn't have been able to answer the question. But now we can trot off a whole bunch of examples of where we're using AI and machine learning to surface what are otherwise outliers that get masked by the large data sets. And abusive transaction descriptions is a great example of that, where we now all think it's rather an industry norm. And other use cases that we're looking at are around relationship debt. So again, looking for patterns in the data, using human knowledge of the field what triggers financial abuse? How does that impact victim survivors? And then modelling what those features may be and looking for those features in the data sets or the attributes in the data sets. So power of attorney is a good prototype or a concept that we're looking at the moment. So pre-power of attorney becoming effective, what was account behaviour, what was the customer behaviour, transaction behaviour, and looking for patterns post that. Do they match? Is there an increased outflow from the account post power of attorney? We know, unfortunately, a lot of son-mother relationships are impacted by elder abuse in this context. So do we see draining of the account at a gradient that's very different than the gradient that we saw earlier? Now, there could be reasons for that. There could be hospital costs. There could be explicable reasons for it, but there could be inconsistencies that are irreconcilable with the account behaviour before the power of attorney was invoked. And that could be, we're seeing spending on gambling, we're seeing spending on overseas holidays, we're seeing spending on luxury goods or alcohol that we didn't see before. So these are warning signs and flags for further investigation. So the power there is incredible. And then we look at another use case or a concept, a prototype around relationship debt. So what are some of the customer attributes and behaviours and account behaviours that may be suggestive of that? Changes to methods of operation, changes, or we could see potentially 2 salaries coming into an account but only one person ever operating on it or withdrawing money from it. And again, some of those could be benign signals and some of those could be things for further investigation. Other things can borrow a lot from the fraud environment and the scam environment. We talked a little bit about, Julie and Catherine alluded to it. Account takeover. You know, we can get telemetry from accounts now that shows who generally is using the account, or user A generally behaves like this. And we can see user B works in user B, typically a scammer and potentially a perpetrator of financial abuse, looks like this, leaves different digital signatures. And that could be a sign that they're on the account, they've hijacked the account using credentials through subterfuge or coercion, and they're operating it to open a personal loan, to open a credit card, using the credentials of the victim survivor. So bringing together the smarts from fraud and scams world into financial abuse, because we're basically looking at the same thing, a species of financial crime, to take action to make it a safer place. Now, a lot of these things we are sort of mid-flight through our program, and we are mid-flight through the life cycle of the product, because these products were designed decades ago. But then once you do get into this discipline of thinking, well, gosh, that's what went wrong with that, how do we, when redesign comes up or new products to launch, we have that very strong focus on safety by design. A lot of these things will be addressed and addressable.
Thank you, Leif.
May I say thank you to CBA for being the first bank to adopt new changes to terms and conditions. That's a really fantastic outcome.
You're welcome. We're compelled
So
to
this
do
is a scoop for everyone in the audience, the announcement that Leif has made that CBA is actually the first bank to undertake this review proactively. So thank you, Leif, for letting us know on this occasion. Yes. Yeah. You talked about the signals, Leif, that you can obtain from analysing the data, but I'm sure there are challenges in the bank then using those signals to actually assist customers. What are the challenges beyond just using the data in a way to help customers on an individual basis?
Yeah, well, I think on the signals are quite rare in the data sets. So by definition, when you're mining large data sets, the more data you have to train models, the better off you are. And there's a sparsity of the true attributes or the true positives. So training the models is really quite hard to get the right levels of label for a supervised learning environment or a self-learning environment. You need it to be able to call as many true positives as possible and minimise your false positives. So that is a real challenge. But, you know, the abusive transaction description initiatives show that it can be done, and it can be done well. And it can be done well where we have, you know, numerical variables, and in the case of abusive transaction, text, which is really, really hard a challenge to solve for. But with natural language processing models that are there today, and now some of the large language models, we can do both and succeed in both areas.
And can you talk to us about any of the other challenges a bank may face?
Privacy is
when
another
dealing with
challenge, because if
customers?
we want to intervene, particularly say in a financial abuse case or elder abuse case, privacy does raise its issue, like how do you provide assistance, or how do you reach out to get assistance and refer to external agencies or adult safeguarding authorities when you can't share sensitive personal information without the specific consent. And that could arise for a number of reasons, like legal incapacity or lack of capacity. Physical incapacitation, where you're dealing with an intermediary, could be the perpetrator, so difficult there, or coercion or force are being used to prevent us engaging effectively. But one of the recommendations for further consideration coming out of the recent Attorney General's review of the Privacy Act was looking at ability in good faith to share information or disclose information where there may be a compromise of legal capacity or financial safety, which would be a huge boon in this area, because then you make the good faith judgment, I've got all these indicators of risk here, make the referral and let the adult safeguarding authority, for example, investigate, would be fantastic to remove that barrier.
Thank you. This is a question to each of you. Are there any difficulties banks face in actually identifying financial abuse in the first place and in the absence of disclosures by customers? I mean, Leif, you talked about some of the data that you can use, but what can be other challenges? Or if a situation arises where the victim survivor is denying that they may be subject to financial abuse, how are you able to support them in those situations?
I'm happy to kick off. So part of what I did in the paper was to really list, here are the ways products are weaponised, and that was developed by looking at a lot of research work that the ABA had done and talking to victim survivors, because they're the ones who can tell you what's going on. But listing it product by product and saying, these are the things that are going on with your products right now. And once you see that, you can't unsee it. And now everyone has the information available to then show how might they consider that under their design and distribution obligation, to consider customer vulnerability and to consider the needs of their customers. So the next column in that table says, and here's what you might do about that, product by product. So this is what is happening with your products. Here is how you might design them to prevent that and to provide safety. So I would say, yes, some of those are really easy to implement. Two-factor authentication, everyone's been able to do it. You can argue the toss about when you want to do it, how that might work. Joint mortgages is really hard, and you might need to get some regulatory relief from APRA or ASIC and think about that quite differently. But there is a spectrum of it, and my view is that even if it's hard, there are some things we didn't know about before. How long will we stand by and say people are getting harmed and we have the ability to intervene, and banks are uniquely placed to do that.
Any final words from you, Julie?
I'm going to go off script and really talk about the AUSTRAC Westpac learning around remittances to the Philippines and other places as to pay for child sexual exploitation. We're now seeing a tripling of reports of sexual extortion. These are organized criminals from around the world who are creating fake and imposter accounts. So they're weaponizing Instagram and Snap, but then they're taking young men, mostly 90% of them are young men between the ages of 18 and 24, offline. They're sending intimate images to sort of wear them down and asking them to masturbate for the camera or send other nude images. They immediately capture that and extort them for money. You know, I've seen a timeline where a young man in his bedroom was contacted by a fake or imposter account at 8:07, and by 12:23 he'd taken his own life. It's pretty stark. It's happening at scale, and it's all about money and transactions. So we are working with law enforcement, of course, to get word out that it's much more lucrative than a scam. So we've seen some of these criminals will say, I want $10,000, and the kid will say, I'm 15 years old, I don't have that kind of money. Well, how much can you give me? And once someone pays, of course, their criminals will continue to come back. But if there are ways that banks can pick up these signals and work with law enforcement and regulators like ours, I think we could go a long way. There is so much that banks could do, just thinking beyond that financial abuse or even that customer relationship to how the rest of society can also be helped or harmed by the technology. Because we are talking about convergence, and banks are becoming technology platforms.
And not just convergence, I think, but actual human harm and distress, which is something we all need to be solving for. Yeah. Well, thank you very much. We've run out of time. Thank you very much to the panel for such an important discussion, I think, on a very, very important issue. And hopefully everyone in the audience has taken away at least one or two messages that you can use within your own organisations to help spread the message around women's financial safety and other issues of abuse. Thank you.
Thank you.